And 1, 2, 3. Good evening, everybody. Sorry, I just got myself some free time that is not noisy to be doing this analysis. So let's dive into what the fuck happened, man. Okay, so first we have to have a review of yesterday. And during the CPI news, you can see that gold firstly had an enormous sideways range, which is from 1870 down till 18 supposedly 42.68, but it shot from 1843, 6 pips away. So in that arena, we saw that this two range is known to have high volatility volume that can cause the market to spike both insanely up and down. But then, after finishing the cycle of the sideways, hence it arrived at 1865, and this is where the high risk trade for me was taken. So the reason to it being high risk, you have to first visualize the candlesticks back then. Before yesterday, none of this existed. 1, 2, 3, 4, 5, 6. So it was at this red candle. So I will just scroll it a bit so that you can visualize it. So on the most right red candle, if you have seen over here, this is an engulfing by H4, and when it was around this area, it was a solid yellow, meaning it's a bullish candle. And usually, if that is the case, it will break all the wick and just shoot into this minimum red box. But it didn't do that. It used the particular level of 1865 to drop. So this is where the high risk move is, taking trades upon the breakout or prior to the breakout. But nevertheless, so once that happened, it broke 1852.69, which was our range. And like I said, if it breaks here, we just have to look at weekly. Weekly will be floating into the black area, looking for where? Remember this cute little red box? This is where it will have to do its decision. So now, you might be shocked in terms of the movement, but the size of the movement is simply because it is coming from the weekly and monthly movement. So the best way to do this is proper risk to reward money management. So whenever a high risk trade is taken, as you guys can see, I will not risk more than 10% of my account up to maximum 15% for a 200 to 300 pips float. Meaning to say, it's safe to have a ratio for every 100 pips you float, you risk 5% of your account if you don't want to use SL. So for me, I don't like to trade with SLs, you guys know that. So in terms, I just use percentage ratio. So let's say now, what do I do? So usually when I'm floating, firstly I know of this total black zone, right? So when we are in a black zone, I never rush my position firstly, because in the end, what we are trying to do is get the pure reversal. So from there, you must always be able to sustain your fear, because what's there to fear? You understand or not? What the fuck is there to fear? Because as we mentioned, if it breaks here, it will float in this area. If it can't break 1826, it will make its way back up. You can't die. Impossible. You can only die if you decided to full margin. In general, that is the main cause of death. So as of me today, knowing that if truly I want a reversal, I will have to be patient, simply because sometimes reversal takes time. So I know that this red box is my limit, and if it breaks this, I will cut. So maximum, it will damage me around maybe 15 to 20% of my account. But if it works, the layering from here will bring it up back to where? Minimum a clean 200 to 300 pips. So from there, I'm certain that it will be blue again. So in that blue moment, then I can decide to hold my trade or to try swing it even more. Why is the swinging probable? Simply because look at this monthly candle. We still have around 2 weeks to go, and it is now arriving at the lowest and the opening of last month's candle. So don't tell me at the opening of this candle, that spiked the price for around 1,350 pips. That's not even 10 to 20% of a buyer volume here. So there will be, or there needs to be, from this line, a clean 100 to 150 pips at the very bare minimum. So now the game is waiting, and it can even start reversing from here. But this is the part whereby I always like to teach people, have the ideology of becoming fearful of the market. So for me, I love when my account is red. Number one, it allows me to not get into an aggressive mode. Number two, it allows me to know that, dude, it has dropped so much. The next key level will give me at least 20-30% of the total movement. So in that next key level movement, I can definitely recover my entries. So this is the skill sets that it takes. Most of the time, you won't have to float this big, but like I said, it's a monthly, weekly movement. Be prepared, because I've mentioned in the analysis on Tuesday, the total weekly zone of the prostitute zone is from 1826 all the way 1852. So that's why when it broke 1852, there was no point to layer more, to do that, nothing. It was understanding that you might have to float all the way, no matter how long it takes, inside this zone. Same goes, if it broke up yesterday, it will be doing the same shit, finding one of the red boxes up above. So as a trader, never be scared, because if you are scared, you're not going to be able to perform. So in this segment then, what do I wait? First, I want to wait for, number one, if it can make its way into the red box. It will give me a little more confidence to add more layers here, and by the time it spikes that 150 pips, 200 pips, my float will be maybe around $300, $200 rate. So in that segment, I can choose to close. But if it gives more than 60 to 100 pips, then the account will then shift into blue. So this is the strategy of swinging. You don't burst your account in one trade. And yeah, if ever you do take high risk trades and you don't want to risk, always remember, I always told this before, risk only 5% of your account for a 100 pip float. So now we can't do anything because it is just floating in the black zone. So this is the game whereby scalpers will win. You can enter on the M1, M5 setup, buy, sell, buy, sell, buy, sell, until you see a solid next continuation, drop or reverse. But for the buyers, if anyone that has any floating position, we all have to just monitor 1826.28. If it wants to break this more solid in terms of H4, then I think it's best to cut. But if it then starts respecting, then we just take whatever we can salvage from the market. So I'm sorry that you guys have to experience such craziness, but it happens, you know. But nevertheless, don't be scared with trading Forex. So let's see how it goes. Because also to add on to it, if the buy suddenly really happens, and let's say, look at the monthly, let's just treat this as a H4 candle. If the retracement back towards the upside happens, I can feel the first retracement level would be 1852.69. If tomorrow it keeps going, then it will go into 1870.53, next pit stop. And if it keeps going, 1884. So do you see how every line between the lines is a 100 pips zone? So now if it breaks the purple line, one more 100 pip. If it goes back above the purple line, one more 100 pip. That is how the market is moving right now. So yeah, let's just enjoy the show. So in the M1 for this, if we can see, M5, if we can see a solid break of 1838.60, then maybe it can retrace back for another 60-70 pips clean from here. But I will not risk my margin to add unnecessarily when it's not inside my key level. Make sense?